And we have some breaking economic data now. We have personal income up 0.3%. That's against a survey of 0.4, so it's a little bit off of that. On the other hand, personal spending was 0.6%, 0.6%, as opposed to 0.5, which was projected. Now, critical number, PCE deflator year over year. This is what the Fed looks at right on the survey at 1.8%. So mixed numbers, but right on the dot on the PCE deflator. And then we want to bring in now Scott Brown, Raymond James chief economist. He's joining us from St. Petersburg, Florida, and Bloomberg's own international economics and policy correspondent, Michael McKee. So, Michael, let me turn to you first. Any surprises here? This is now, again, month of November. The numbers we got yesterday for third quarter, these are more recent.
These are more recent, and the good news for the economy is we are spending more than we anticipated, up 0.4. The bad news for the economy is we're making less. Incomes come in lower than expected and lower than they were last month. Although, when you break it down, wages and salaries were up 0.4%. That's double what it was in October, 0.2. So your losses are somewhere else in the income spectrum. So it's not as bad as it appears, but we need to see the income levels continue to rise. And you may see this with the tax bill once we get to February or so, when they change the withholding tables and you start to see money coming, staying in your paycheck, not coming out of your paycheck.
Right. So, Scott, Mike makes a critical point. This is all pre the tax overhaul, where this is all in anticipation now. What do you make of these numbers? What do they tell us about inflation, if anything? What do they tell us about growth, if anything?
Well, in terms of start with the growth, we saw pretty strong retail sales reported last week, but we also had upward revisions to previous numbers. So it looks like consumer spending a bit stronger. But this has been kind of a seesaw year. We had bad weather in the first quarter, a rebound from the weather in the second quarter. You had hurricane effects in the third quarter, and we're seeing a rebound from the hurricane effects in the fourth quarter. So it makes it really kind of difficult to gauge that underlying trend. I think the concern for the consumer is that the wage growth has been relatively moderate, but we've had higher gasoline prices. So, the purchasing power of that added income is relatively soft. So it's a bit of a concern, I think, heading into the new year. In terms of the inflation, we've been over this a number of times now, where there's been a lot of factors pushing inflation down in the last few years. We've had a lot of slack in the labor market. You've had a strong dollar, weak commodity prices. A lot of those things are behind us now, so you're probably poised for maybe a little bit of a pickup in inflation. And I think the Fed's expectation that they are going to get to 2% in underlying inflation over the next couple of years is a pretty good forecast, and I think we're going to stick with that.